All right, today the NASDAQ had its biggest one-day drop in a month. What is that the beginning of? NVIDIA rolled over as predicted, as expected, hitting $120. I'm going to take you into that chart today and tell you where the next significant level of support is. We do have to ask the question, though, with NVIDIA, the best-in-class AI stock, is the AI story done for 2025? We'll explore that a little bit. President Trump slapped tariffs on EU imports. They're going to retaliate. They've threatened retaliation, and it caused Tesla stock, domestic automakers stocks, to fall. Tesla's been in a downturn, as has most of big tech since the middle of December of 2024, but things are getting pretty ugly. The fact is, it's an ugly term, but, they refer to when a stock keeps dropping and goes where nobody expects it to go, even that stock will get a dead cat bounce. Well, we are getting very, very near to Tesla's main level of support that is pretty well established. And so, yes, I'm expecting even a small bounce, but it could be a full reversal moment. I'm going to just briefly cover again where that is on the chart. We made money again shorting Tesla today. It's actually been pretty easy. Every day I've given a trade on Tesla to take if we drop beneath a certain price. Now today we did see some choppiness, and there was some not a full capitulation under that price, but as we got closer to the close, it really began to sell off, and that trade setup worked. I often take the trade setup after the price crosses it, and I get a nice percentage gain. But if it comes back up later in the day, comes back and crosses it a second time, it can even be a more powerful gain. I'm going to show that to you guys in the charts today. Will the trade war crash global markets? What warning signs is the jobs data flashing? What did the GDP report that we got today mean? Well, let me go through a few things. The fact is that people are afraid of the tariff wars because they don't know the outcome, and the market has to constantly price it in because all of the decisions that smart money is making right now are not for today. Smart money is not scalp or day trading. That's what a lot of retail traders do. Smart money is investing, and they're looking down the road for the outcome that is ahead. The GDP, we got that. It showed that the end of 2024 was strong. We got a nice tick up in the GDP. The problem with that was that it was largely attributed to government spending, which we kind of know is what's propping up the U.S. economy. Well, what's wrong with that? Well, besides the fact that we know that they're not doing it efficiently, we now have a new department called Department of Governmental Efficiency, and they are cleaning up the Washington's streets. And this can, if done too well, can hugely impact the jobless claims. And it could actually, just like the tariff wars, these things could be intended for good purposes, but if they're done too efficiently or too aggressively, they could absolutely push us into a recession. Now, I'm not predicting that. I'm just saying that until all of these things play out, we're going to see a ton of choppiness and volatility. There's nothing new going on here. The jobless claims came in, and they were higher than expected, but analysts largely attributed it to weather conditions at the moment. But they're going to be watching those very carefully because the fact is they're rising, and you know how they love to revise those numbers. And they can easily be revised to the upside in later dates, revealing that the economy right now isn't doing as well as people are hoping. Well, we're starting off with a little bit of bearishness. I'm going to remind you guys that there's always money to be made on Wall Street. I refer to it like getting on a subway train heading into downtown. There's always another train that comes around the corner. Right now, the trains are in shorting this market and writing puts. And if you're not an options trader or an options hedger, let me just tell you right now, the best thing that you could do is to do nothing, is to sit on your hands, because as I've been saying all week long, we're largely moving towards a potential buy, sell the rumor, buy the news event. What is that? Well, that's the PCE. It's the Fed's preferred inflation gauge. It's going to tell us whether or not inflation is ticking up. Okay, and that's a huge concern. And I think largely I think the reason why the markets has been selling off is because they know it's ticking up and they're pricing in that uncertainty and impact on the markets. We have a lot going on. We have inflation that has been ticking up, but we've got some things going on with Doge and with the tariffs that could bring or slow the economy down. Ultimately, it will lead to the Fed having to react and stimulate this economy. And maybe at that point, simultaneously, we'll begin to see the Doge team level things off and the tariff war come to an end, and we'll be back to a bull run. I'm going to make a prediction right now for you guys that we are in classic distribution, okay? And what that can allow us to see is lower lows and lower highs. And I was going to save this commentary for the end of the video after the charts, but let me just give it to you right here on the front side of things. If Bitcoin turned around tomorrow and it stopped this painful descent and it ran back up to 100,000, would you hold? Would you believe? Would you take a huge sigh of relief and believe, well, thank goodness we're back. The bull run's back on pace and the altcoins should soon follow? Or would it be your last opportunity to potentially get out before the winter began, before the next leg down? This isn't going to get easier, guys. This is going to get harder. And what I want you to do is this. Long-term investors with a long-term view are going to be fine, especially if you have some money to buy the dip. And right away, about half of you checked out and said, man, I don't have any money to buy the dip. And I was expecting to make some money off of my recent speculative plays. Guys, there's always opportunity. Some of you are going to have to reset. Some of you are going to have to find some new money. Some of you are going to have to sell some things that you were hoping would reverse that simply don't reverse, so that you can get back into a position where you can truly run in step with this stock and crypto market. Now, let's get into some charts. I'm going to talk to you guys about NVIDIA. We're going to look at Tesla. I'm going to make predictions on all of these. I'm going to take you into the Bitcoin chart and tell you what I think could happen there and what the candles are telling me. We're going to go by the charts. Price is truth. This is the Stocks with Josh show. You know the game. Hit the like for me. If you need some help right now, I provide it every single day in these videos. I think that the guidance that I'm giving in the charts is and can be very, very helpful if you follow it or you truly, truly listen. Some people are just showing up and they're listening, but they're really not taking any of the disciplines that I talk about on this show almost every day, which is to control your position size so that you can continue to play no matter what's happening. You need to put a stop loss in because sometimes you're wrong. Sometimes I'm wrong. We make an investment decision and the only thing that's going to save us is the stop loss. I mess with my stop losses, okay? I took the stop loss off when we were running up to NVIDIA's earnings. When it came down and hit 137, I put it back on. I occasionally do that to give a stock one more chance and to make sure that maybe my stop loss wasn't too tight. Well, it did go higher the following day, but I had to put it back on and I had to accept the outcome of getting kicked out. I've got some diehard picks. I'm still holding on to AMD. I still have a position in Intel. I've decided to hold it through the storm and to add to it along the way. And I think that AMD is the one that's looking like it wants to just keep going down, but I've got a plan. I'm going to buy some more. But the reason why I'm still sleeping at night is because it's extremely controlled position size. Come back to the market. Some of you guys have already turned your back in disgust. I'm going to tell you, focus back on it. The biggest mistake of your lives, I personally believe, if you've gotten this far, is to turn away and give up. I had seasons like that in my 20-year journey of investing on Wall Street. There were times when I had to just walk away, and I walked away for years, and then slowly it called me back. And personally, I wish if I looked back over the whole thing, I 100% should never have not been 100% focused on Wall Street and on the crypto market, because you're the one that has to learn the lessons. The opportunity is there, and the opportunity is incredible. Okay, let's get into some things. Let's talk about the Stocks with Josh Discord and the Stocks with Josh trade setups that I give every day. I gave 4 of them today, right? One of them was on MicroStrategies. It never triggered. I'm going to call that a success because it didn't give a false signal. That's a good thing. HIMS was a win to the upside. Didn't last very long, but it definitely printed. And if you took some profit and locked in some profit, and I've said repeatedly, if you can get a good 20, 30% on these scalps, do it. I've also said repeatedly, I give a target, but don't think that it's hold to that target, right? If you get a nice 30, 40% pop above the price I give you, take it. Take half of your position, hold some runners. If it comes all the way back to your entry price, let the runners go. If the runners go all the way up 100 or 200%, then you keep holding them as long as they're climbing. HIMS was a win. Tesla put for the win. I call Tesla the bread and butter because it keeps paying all the bills because it's pretty easy. It's got great liquidity, huge moves. It rarely spends time consolidating anywhere on the chart. It just keeps breaking up or breaking down. A ton of money to be made, but not for the bag holders. Today, we made money on puts to the downside, and those printed more than once. You could have taken them off of the initial cross, and then on the second cross of the day, they printed yet again. SPY, I think, was the biggest winner and the easiest to trade. I called puts on that, and you can see that we've had a beautiful capitulation day and we made some money. Guys, I give these trade setups every single day. Upon analyzing them, I saw better trades in the market, and I was like, I really should have called this one or that one. The woulda, coulda, shoulda, everybody does it all the time. Tomorrow, I'm going to pick great trade setups for us again, and I would encourage you, you don't have to load it all in. Don't do that, but take the trade. Consider taking a single small position and see how it goes. Grow in that area, right? Or use the technicals and use the confirmation to know whether these things are going higher or lower, right? So I'm giving you those lines in the sand. Let's take a minute. Let's break down NVIDIA. Obviously, NVIDIA's shares actually went down over 10% from the high of the day. They obviously surpassed revenue expectations with a 78% increase to $39.33 billion. The company forecast has raised concerns among investors. So it was the forecast going forward that concerned people, but even more specifically, it was the decrease in gross profit from 76 to 73%. The market wants to see it accelerate, but man, it's so high already. These guys are crushing it with high margins. It just reminds us of how much this stock has run up. It ran from $150 all the way up over $1,000. That would be comparable to it being $15 and running up all the way to $145 in the last 2 years. Well, now we're pulling back a little bit. I'll give you that next support. Let's jump into the NVIDIA chart and we'll take a minute and go over that. I just want to point out a couple huge and important trading things. These are lessons. You guys see that beneath us, we have the RSI, okay? Now, I've got the monthly chart up, so each of these candles is a month in the market, and then I've got the 5 EMA. That's the 5-day exponential moving average. And this is one that I like to use with the monthly chart because it's pretty simple. If you're above the 5 EMA with monthly candles, you're typically in a growth trend and a strong uptrend. If you open and close beneath it, the trend has changed. I'm going to take you there in just a minute, and we're going to examine that. But I wanted you guys to visualize how significant this move has been, how few red candles we got along the way, just a couple sprinkled here in this huge journey of up growth. NVIDIA's been a rocket ship, means a lot of strength has been priced in. Guys, give it a break. Let it breathe. Let it have a moment to pull back, right? It's got to take that time. If we go down to the RSI, we see that we actually made a high here, a price high, and down below we made a momentum high, okay? And then we pulled back and we had this huge move up from 2023 to 2024. We made another price high, but oh no, let's put a sad emoji face on the chart. Oh no, we did not make a new momentum high. And I cannot tell you guys this story enough when we're looking at charting, that to have a truly bullish ongoing move, you've got to have a higher high in momentum and a higher high in price and a higher high in volume. Now, all that we have here is a higher high in price. If we look at momentum, we see that it made the same high, even though the price went higher. That's bearish divergence. And the third factor of a bullish move is volume. And you see that ever since back here, volume has essentially been slowly rolling downhill, getting very low. So all of this is telling me that this rollover on NVIDIA has really just begun. So let's just talk about that for a moment, because we're going to take it one level at a time, one candle at a time. And I just want to zoom in here so you guys can really see this. One, as I've increased this chart, you can see that back here, the previous high was also coinciding with a much higher high in volume. And we went higher in price, volume went the other way. This is very classic bearish divergence, signaling that the move up is going to come to an end. Now, the next support beneath us is 113. I want to point out just a couple more things on this chart. You see these beautiful, big, tailed, long, wicked candles that pushed price to close on the monthly time frame back above the 5 EMA. Well, they were signaling that we were going to go higher. Well, now we've got the opposite. We've got two big, wicked, long-tailed, bearish candles with a price beneath the 5 EMA, signaling that we're going lower. Well, the price points that we're looking at, the next target on this chart is 113. So that's what we're going to be watching for tomorrow. And the bigger picture view is that I believe that largely, this is my prediction for NVIDIA, is that it's largely going to go sideways for the next 4 months. I don't expect a break above 153, which would take us to 173. I do expect that this year, but I expect it in the second half of the year. Now, do I know for certain that's going to happen? No, but I love the company. I think they got the right product, the right management team, and they've proven themselves to be a stellar A+ AI company. This is the type of company I love to invest in. So I'm going to continue to buy on red monthly candles. I'm going to buy because I believe that later in the year, we're going to see higher returns from them. So I'm excited about it coming down. I don't like it, but I believe it's going to give us more opportunity for profits right now, as long as you've got more capital to put to work and you don't turn your back on this market. So I do believe that NVIDIA is going lower. At bare minimum, we're coming back to 113. I would expect that we would likely hit it tomorrow, but we're going to basically be range bound. We don't even have to hit 113 tomorrow. We could actually bounce up to back to 130, and then we could, a month and a half from now, come back and hit 113. What I'm telling you guys right now is we don't have the catalyst to take NVIDIA higher right now, and we will test the bottom of the range. And so the big question is, if we come down, do we make a lower low, and then we continue the trend down, right? Or do we come down and make a higher low? And I believe that we'll continue to consolidate into the middle of this year. That's basically my view on NVIDIA. Let's look at Tesla. It's suffering right now. A lot of big tech is going down right now. There are some showing relative strength. I thought that Meta was doing pretty good today. Amazon was doing okay. So there are some showing more strength than others. Tesla, of course, was showing stronger we won't call it strength to the downside, stronger weakness. And we know that just like NVIDIA, we don't have at hand a catalyst that's going to drive it up. But we do know that Wall Street will not let these get too low before they begin to nibble, and then eventually they begin to buy heavy with the anticipation of a reversal. Let's go look at the Tesla chart to see where we can go next. All right, yesterday I showed you that the bottom of the golden pocket, which is a typical retracement zone, was down here at 265, which very much aligned with this previous shelf of resistance, potentially turned support here in the coming days. I am expecting to get a bounce here, and this is the spot where I will be looking to take longer term positions going into 2025. We've got to give this some time. I told you this yesterday that we had to give it some time to come down. We've taken another leg down, and I don't see why it necessarily would stop until it gets to 265. And even though I believe that ultimately 265 is where all the support is, it absolutely wouldn't shock me if we get a reversal and consolidation period tomorrow to fake out to become a bull trap, only for us to ultimately still go lower and hit 265. That's how we end up getting patterns like inverse head and shoulder patterns, right? We get the left shoulder will be an area of consolidation right here. We go on to make the head, which would be the full dip to 265. Once we start feeling like we're getting back up, we end up making one final higher low shoulder before we push back up to 325. That's kind of what I see happening with Tesla. All right, I've got 3 more charts for you. We're going to go through them quickly. I'm going to give you a peek at the SPY, what I think of that chart. We're going to look at Bitcoin. What does it need to do? And I've got Snow up to make a comment about some candles that I see that I'm a little concerned about. Let's go look at those. Okay, I just want to point out that this is not a good look here for Snow. We've got 2 big problems. One, we are dealing with a massive red volume bar down here. And we are up against resistance. And so whenever you get volume at resistance, it often is a reversal signal. And we did see it reverse. But even worse than that is this tweezer top. I recently pointed it out in Bitcoin, which has given us this big sell-off. But yet again, the tweezer top, the bearish tweezer top, has raised its ugly head on the Snow chart and is giving me some huge concerns. I've liked Snow a lot, but from a technical standpoint, we've got a couple big problems in the chart. One, we've got resistance at around 195. We've got some bad candles, and we've got some significant selling volume. So we need to play this very safely, give it some time for a move down. I think it's going to need to consolidate a bit more. Right now, 167 is support, and so we need to see if it gets tested again. 194 is the breakout zone, and so until it breaks out and we get some candles to open and close above 195, this has to be a no-go stock. For me, at least it is. I wanted to go long on it. I wanted to buy leaps on it. I was hoping that we would see this move back up to 280, but it had an incredible move going all the way back up to $200. We were able to get a nice chunk of that, and the tweezer candles right against resistance with high volume selling tells me just to back away and let it breathe and let it cook. And so I just wanted you guys to know that I'm lightening up. I'm lightening up, reducing position size or eliminating positions altogether. Tomorrow is going to be a big day. It's going to tell us a lot, but we need to see these recover. We need to see them begin to show us a string of green candles before we buy. I have bought little bits of the dip. I've nibbled, but at the same time, when the chart just turns against us, we've got to then decrease our position. I know that it's painful to do, but you'll be happy that you did if you get a chance to buy the same stock 20, 30% lower. Okay, let's go look at the SPY real quick. Okay, the SPY was one of our trade setups here, and it was for take a position on puts beneath 593, and you can just see with that huge red candle that those printed hard today. A lot of money to be made. Now, I wanted to give you guys the next significant support level. The next 2 is the 580 and 570. Beautiful, round, psychological numbers, but they align very nicely with previous areas of reversal. Now, before I tell you that the SPY is going down to 580 or 570, let me just share this with you. Tomorrow we're getting the PCE, and we're getting it at 8:30 a.m. Eastern Standard Time, an hour before the market opens. If the market interprets it bullishly, when we could potentially see a green candle, and we could actually begin to go up tomorrow morning, or the market could have one final sell-off moment, and then we've got to see if the buyers come in. And so if we get all the way down to 580 on the SPY, it becomes a bigger concern, because technically if we could reverse before 580, we would still be making a higher low, which means that we could go on to make a higher high, pushing us all the way potentially to 620 or 635 on the SPY. And if we get beneath 680, and this is one of the biggest points of this video, it creates a new trend, and it takes off the table that opportunity for a higher high. It doesn't mean that it can't happen. It just means that the likelihood that it will happen has dropped significantly. So Tomorrow morning, right now, for me, is the most important trading day in 2025 because we need to see if we can make a higher low on the SPY. It will tell us a lot about what to expect over the next 3 or 4 months. Let's talk about Bitcoin for a minute. I'm going to take you into the chart, and then I'm going to close this video up with some opinions on what's going on with crypto. So right now, we're looking at the monthly candles. It does not appear as if we will close the month above 90K. I made a pretty bold and straightforward prediction that if we closed any months under 90K this year, that would signal to me that the opportunity for a mega bull run up to 150 or 180,000 was off the table. Now, before I even go further in chart analytics, I just want to make this comment. Why did Bitcoin roll over? Well, I actually told you guys in a number of videos recently, it's that the majority of Bitcoin holders, 95% of them were in profit. So smart money does is they sell and they lock in profits, right? They don't view Bitcoin as a world-changing technology. They just simply view it like the NASDAQ. And I just told you at the beginning of the video that the NASDAQ had its worst day in a month, right? One of its worst days here in 2025 already. And smart money just simply views Bitcoin as a high-risk asset that they have deep profits on. And if the market's not showing you strength, which we've already gone over, the threat to the market, the GDP, the jobless claims, Doge, all of these things, some positive, but also negative simultaneously, smart money locks in gains and they roll that money into defensive stocks or into bonds. And so the fact is, the reason why Bitcoin didn't go up to 120, 130, 140 is because of the macro environment, and 95% of Bitcoin holders were deep in profit, and so they're simply taking profits. So this story could still turn around, and I'm going to take you into the chart and make a point about that. The fact is that if people believe that there is a catalyst ahead, then they can begin to get back into it, right? The bleeding can stop, just like everything else, just like big tech, just like Tesla getting close to 265, 270, just like Palantir getting close to 80 or 75. It can reverse. And so I'm going to give you guys the line in the sand and a warning regarding Bitcoin, but I'm still believing at this point that we could have some volatility that would bring Bitcoin all the way back to potentially 116K or only just 100K. So we could make a higher low or we could make a higher high. But more specifically, I don't really believe at this moment, not unless we get what Donald Trump suggested he would give us, which is that Bitcoin would become a reserve asset, which I don't think it's on the table. They didn't even say they were going to do it. They were going to do a basket of cryptos. Until we get that kind of news, the fact is the run appears to be largely over, okay? And closing this month under 90K, you know it's a massive red flag. We already began to capitulate. So you guys were prepared by me with that in mind. As we got halfway through the month of February, the fact that we were under 90K right in and of itself was a huge warning sign that I had prepared you guys all to be aware of. But let me just go through some scenarios for Bitcoin that can guide us over the next 30 days. Okay, so I want to point out that there are 2 levels of support beneath us right now. One is 74K, the other one is 70K. I didn't even put it on my chart. Ask me why. I was disgusted. That's the truth. I didn't even want to put it on the chart. But I'll tell you something about 70K, okay? Just like getting under 90K, we cannot get under 70K. And this one is an unbendable fact, okay? Because anytime we've gotten under the previous market highs top, which we know to be back here right beneath 74,000. Anytime that we've gotten beneath the previous market top, that 100% of the time was the end of the bull run. And so best case scenario for a continuation to the upside and a second chance to sell some crypto before we enter into a hard, cold, bitter winter, we've got to bounce off 74K, guys. We got to bounce off 74K. So that's the local area of support. This is where we could afford to go. I'm not even saying that we have to get there, but if we do, we have to bounce, because if we don't bounce and we cross beneath 74 and we touch 70K, even if we get a little bitty bounce or a dead cat bounce, it really shouldn't matter to you. You should be at that point selling every single rip to preserve capital. Now, that is from the standpoint of what I'm doing. It's not a suggestion for what you should do with your money. You do whatever you want with your money. I'm definitely going to do what I want with my money. I've been predicting Bitcoin. You guys know that I locked all my gains in back at the end of November. It was a process. I did some trading. I've largely been taking positions to the downside. I bought that huge dip that I predicted, profited from that. But since then, I've been gaining by the move going down, right? And I'm continuing to posture myself for Bitcoin to go down. I will begin to look for a reversal between where it's at today and that 74K. And I actually think personally that we will bounce there and we will come back. And I have two targets ahead of us, 100K and 116K. And my big question to you is, would you sell? If it was very painful for you to be in this position now and we got to 100K, would you sell? Would you be mad if it went on to 116? Would you sell at 116? Or would you just keep holding? What is your exit strategy? A couple weeks ago, I did a video special on crypto, and I said, you got to design your exit strategy right now. And if all of you guys had did that a couple weeks back, you'd be very, very happy. And I'm just going to leave you on this thought. If you get another opportunity to figure out your exit strategy specifically, and we get a bounce, a dead cat bounce, or any form of a move back up off of 74K, potentially all the way back up, even as high as 116, what is your exit strategy? Are you doubting that the winter's coming? Are you believing that this is only going to go higher and higher? I hope not. These are very cyclical. I made a fortune. I made enough money between the last crypto cycle and this crypto cycle to retire if I had conservative spending habits. Okay. But if I wanted to buckle down and live off of just what I made between these two crypto cycles, I could do that, and I could live the rest of my life and never work or think of work again. I'm not going to do that. There's too much opportunity at hand here on Wall Street. But there's going to be a ton of opportunity to short cryptos into the long 2-year winter ahead of us. And I'm going to be doing that as well, right? And there's a link in the description of this video for BloFin. This is an app that you can use to short crypto, right? It takes a little bit of knowledge, and I'll help you with that in the Discord. I'll help you by answering questions myself or Mark from Tribal Trades or some of my other crown traders, but we'll do it together. Right now, I actually still believe that there's upside potential for crypto and Bitcoin. I think that the wild card who's causing so much wild trouble, which is Trump, is going to pull out that wild card before things get too ugly, and will probably do something to get a bounce going around 74K. And I think we're going to then have another opportunity. If it's not sooner, if it's not tomorrow, we're going to have another opportunity in the next month to potentially sell again at higher prices. But I'm going to challenge you. What's your strategy? What's your take profit exit strategy? Think it through now, because this simply gets harder to do in greater times of volatility. That's it for today. Thank you guys for your time. Thank you for hitting the like. Let me know how you're feeling today in these markets and what your plan is. Let me know if you would sell at 100, 116, what you're going to do in the days ahead. I'd love to hear from you. Hit that like and subscribe, and don't sleep on the Stocks with Josh Discord. Tomorrow, I'm going to do some live trading again, and we're going to hopefully make some money. Peace and blessings. Take care. Bye-bye.